You're welcome to this YouTube video once again. So I want to show you how we caught this buy. It's quite simple, and I want to show you how you can trade with high confidence. Okay, so just give me 15 minutes to 20 minutes of your time. Okay, but then let me first show you proof that we actually caught this 5-hour trade. Okay, in the Telegram community, automated high Q. Okay, you can see the before. Right? You can see this was before and this is the after it came in. So you can see that is a proof that this trade was actually taken. We're not just cherry picking. Okay, look at the signal was called here in the VIP signal room on the 15th of January, guys. Okay, on the 15th of January, and 5 days after was when we hit TP, all right, which is on the 20th of January. So you can see that we're not just cherry picking and saying something that didn't work. And this is somebody from the VIP signal room that actually made profits with this. So to join the VIP signal room is actually free. All you have to do is just click on the link in the description box or search for automated IQ on Telegram. You join. All right. So this is also more proof for you to see that we took this trade. Okay. I have a reason why I'm showing you all this. So you won't just see it as we're just showing you something that we didn't actually take. Okay. So I want to break down this trade and how you can have high confidence in taking this kind of trades and show you other trades that we took. Okay. So the first thing we'll do is let me do this. Okay. All right. So the first thing you want to do is you want to go to the higher time frame, H4 time frame. H4 time frame to be precise, to understand structure, to understand market bias, to understand the order flow of the market. Will you be right every time? No. But 7 out of 10 times, 8 out of 10 times, you'll be right with the structure, you'll be right with the direction of the market. Okay. So the best time frame I see that is not so noisy and still gives accurate position is H4. I've been in this trading for 6 years now and I've tested a lot of time frames. Okay, H4 is the most accurate time frame to check for structure. Okay, so now let's imagine price has been doing higher, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. But then it got to this lower low, right? And then it just did this higher high, higher low, higher high, higher low, higher high, higher low, higher high. I know you know this. Hold on, I want to show you something you may not be getting. Now, at what point did this market start going up? Yeah, right? You will see at this point was when market reversed and started going up, right? So basically, what we had there was we had this sweep of this low. We had this sweep of this low and then this BOS, which is break of structure, or BMS, break of market structure, whatever it is you want to call it. Hold on, let me show that again. Right, so this is what you want to look for on H4 time frame first before you go to a lower time frame and start looking for your setup or your pattern. Okay, right, and we can also have this type where we have lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, but it is not as low as this one, right? This lower low is not as low as this one. Rather, instead of it to come down, it stopped here and then broke structure and start going up again. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. All right. Now, at what point did this market start retracing to the upside? Yeah, right? I know that's a very funny question, but then I just want your attention to be here, right? Now, at what point did that start going up here? But you can see that there's a difference between this and this. I mean the change in direction, right? There's a difference between this and this. Now, the difference is that this one did not take out its own low. Rather, it stopped maybe halfway, quarter way, whatever it is. And then it came up and broke structure, right? It came up and broke. So this is a shift in market structure, SMS. Let me make this bigger, right? So I call that shift in market structure and I call this break in market structure, BMS. All right, so these are the two ways you can understand direction on the H4 time frame. So once you know what is happening on the H4 time frame, that is when you should go to the lower time frame. The lower time frame I trade is H1 because I've tested M30, tested M15. H1 is the one that gives me the highest win rates. And yeah, you just have to be patient with it. You may be good with 5 minutes, 15 minutes, whatever works for you. But guys, like I said, H1 is the best for me. All right. So now that we've established this fact, right? Now let's go to this trade and break down this trade. So we start from the H4 time frame. I want to show you how to trade this pattern with confidence, how to trade with confidence, especially this pattern. Okay. Now look at this, guys. Look at this. Pay attention. We had this. Let's just start from here. We had this higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now, can you see that this low did not come down to take out this low? Rather, it stopped here and then broke to the upside. Can you see that? Just like I explained. This is the 4 hours time frame, guys. This is the 4 hours time frame. Okay? Just like I explained. See that? And then it broke the structure. So this is a 80%, 70% chance that price is about to change direction. It's not more selling again. But a lot of people don't know this. You'll be using RSI indicator or be expecting price to keep selling just because it has been selling, right? You need to understand what H4 is saying, or else you'll be taking unnecessary losses. Okay, so now that I knew this at the time when this happened, right? I just went to H1 time frame. That is when I can now go to H1 time frame and say, okay, I'm no more looking for sell opportunities. I'm looking for buy opportunities. Okay, so at this point, if you go and check the Telegram channel again, you see that it was at this point here when this candle printed was when I called this setup, and it took from the 15th to the 17th. It took 3 days before it came into our entry. Okay. Now that I go to lower time frame, what pattern am I looking at to trade? The pattern I'm looking at to trade is this. Okay. So now the pattern basically is this: a sweep, which you call stop once, right? I would like to see a break in market structure, a clear break in market structure. Even if it's in the week, it's fine. All right. Actually, it's this because this is the guy that sweats. This is the low that was swept, right? And I want to see liquidity also break structure. Structural liquidity. What is structural liquidity, guys? Structural liquidity is basically the low before the main low for a buy scenario, right? For a sell scenario, you just flip this upside down, okay? So the last low before the main low is the structural liquidity, all right? And I'll explain to you why that is important. Without liquidity, you are not entering a trade. Don't even try it, okay? Because you want to enter with the big banks, you have not enough money or lot size to push this market. All right. I got bonds for 4 to 5 years. Like I said, this is my 6th year in trading. I got bonds a lot of years just because I don't know this simple logic or secrets. Okay. So what we want to see is a sweep, a break in structure, structural liquidity that also broke structure. The structural liquidity must also break structure. Okay. It must also break structure, right? And then price comes, take out that structural liquidity, right? And then buy up. This is the pattern we are looking out for. And I got the exact same thing just here. Okay. We had this guy stop on being swept, right? I don't want to use this one single candle. Guys, pay attention to this. These one single candles are like scam. I don't like them. I like to see an obvious stop ons like this. This is sell and an obvious buy. Not this sell and then this one buy candle. This is not obvious, guys. This one too, I don't like it. Where it is scam. They are not real retracements. They are just there to just deceive those that don't know this secret, okay? Or don't have this intuition. All right. So you want to see a clear one, just like in your structural liquidity. When you see just one candle like this one now, it's a scam. You want to see a series of black candle, even if it is 2, it's okay. Then series of buy candle, even if it is 2 also, it's okay. But just having just one hanging there, no, that's a fraud. Okay. So now I saw this. This is a sweep, right? Now I've talked about what makes this strategy high probability, what makes my strategy this pattern high probability based on how I trade it. I talked about mitigating order block or inside bar or hidden base to the left side. So watch our previous videos on this YouTube channel. You get more information about that. Okay. So it mitigated this. There's a stop point. There's structural liquidity. Why do I know this structural liquidity? Is the last low before the main low, right? And it broke structure. You can see that it broke this high, right? Basically, what we drew here may not look exactly like it. There's always variation to the thing. They'll not give you, markets will never give you the exact same thing. Okay. Once again, guys, if you want to join our VIP signal room, just click on the link in the description box. It's free to join, or just search Automated IQ on Telegram. It's free to join the VIP, okay? And please subscribe to this YouTube channel if you are liking this kind of content, and comment what you like to learn going forward, or anything. If you agree with me or disagree with me, it's fine, okay? And please like. All right, so we had to break the market structure. Now, the next thing is that for this structural liquidity to be valid, guys, pay attention to this very important information. For this structural liquidity to be valid, what makes this setup A plus? It's not just mitigating stop on break of structural liquidity. No, what makes it A plus also is when you draw your Fibonacci from low to high, all right, of that whole move, all right, you want to make sure your structural liquidity is at 71% fib or below it for a buy. For a sell, it's going to be 71% fib above it or at it, right? It's either it's at the Fibonacci 71% or below it for a buy scenario, right? Backtest this, guys. If you backtest this, you know that this is super, all right? So you have to have the patience to wait for it. You see anyone that stop at 50%, or the reason why is because this is at discount, guys. This structural liquidity is at discount, and the market makers do not buy, or the banks, they don't buy when price is not at discount, and they don't sell when price is not at premium. So you want to buy with the banks and the market makers to make money with them, because they're the one that is pushing this market, not you. With your small $100, $1,000, $10,000, $100,000, those money are small. You have billions to be able to move this market. Okay, so why don't you move with the big boys? Why don't you move with the big whales? Okay. So you want to make sure your structural liquidity is at discount. Once it's at discount, then you can say, okay, 7 out of 10 times you're going to be right. And we've proven this in January. So far, we've only taken 1 loss and we've taken 6 wins in January, right? This strategy has a 70% win rate to 75% win rate if you follow just the same thing I'm talking about. Okay. All right. So, and then you just draw your structural liquidity, put your what's it called? This thing, and make sure, I mean, this guy, I don't know what's the name, and make sure your stop your stop loss is 5 pips. I use 5 pips for GU because it's quite volatile. I use 5 pips for GU while I use 2.5 pips for other currency pairs. Okay, 5 pips below the low, right? And then extend your this thing there, right? So use 5 pips below the low for GU, and then your TP is this high, right? The weak high. Why your stop loss is the strong low. Okay, there's a higher chance that this low will be protected because of all these things I've mentioned. Now, one other thing you need to look out for is that, pay attention to this, guys. One other thing you should look out for is that your structural liquidity, right? Well, once price is coming, when market is coming, when price is coming down, to take out that structural, because there are a lot of people here. There are a lot of people here that took this buy, right? Took this buy, and that stop loss is here. Because this is a big move. When they see this big candle, oh, market is buying, buy, guys. This is another big candle. Oh, market is buying, right? So what price is actually doing is just inducing people to keep buying, right? And they know that they're going to come and take them out. People that buy it, and people that bought this big candle, where will that stop loss be, guys? Yeah. In short, I know a very popular big forex trader in Nigeria, right? That his stop loss was just here. Where my entry is was a stop loss, and it got taken out. Right? So you understanding this is very powerful. This guy if I mention his name, a lot of you will know him. A lot of you, if you're in Africa or in Nigeria, you will know him. He's a popular forex trader, right? He just blew, I think, last year. The stop loss was just at my own entry. And then price came, took that out. Now, price didn't just come and take that low. What he did first is he came here. Now, a lot of people will see this as support, strong support, right? Support become resistance. So this is a strong support. Price came, right? And then they put their stop loss just at the tip. And look at what price did again. So that's why you need to know the best place to put your stop loss. Look at what price did again. Took out that low. See, it took them out, sniped them out, and before it now start going up. All right, these are the things you want to pay attention to. Okay. All right, and then yeah, we made a 5-hour trade on this. I think this was during Donald Trump inauguration. One thing I like trading H1 for is that you don't have to be concerned about news. You don't have to check section. You have to trade this section, trade that section, blah blah blah. You don't have to do that. Okay. If the news is going to go in your favor, it's going to go in your favor, and if it's going to go against you, it's going to go against you. It does not matter, right? It's all about structure, understanding structure. That's what counts. We also took this trade. I just want to just quickly break this down. And let me first show you proof. This is GBPJPY on the H1 time frame. Let me first show you proof that we took this. I like to show proof. I like to show evidence. So it won't just look like just blabbing and making things up, cherry picking. Because I've been in this industry for a long time and I'm seeing a lot of traders come to YouTube and just cherry pick something and lie. All right, so you can see this is the before, all right, and this is the after. Let me show you that. See, okay, we're not cherry picking here, and this is the after. Okay, it was called in the VIP signal room. Once again, to join the VIP signal room is free. Okay, join the VIP signal room is free. Just chat, click on the link in the description box or search for automated IQ on Telegram and chat with the admin. Okay, so let me break this down to you. First, remember what we said, all right? The first thing you want to do is do what? You go to the higher time frame, H4. Now you can see what we had here. You can see price has been doing higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, right? What is this, guys? This is a sign that price is buying. This is even very obvious, except they are doing you from your village. This is very obvious that price is bullish. So what you do is go to the H1 time frame, like I do. Go to the H1 time frame and look for your pattern in that direction. What is the pattern, guys? You remember, it is this. Right? Stop point, break of structure. Structural liquidity also breaks structure. Price comes, take out structural liquidity, buy. It's as simple as this. I see a lot of people do a lot of analysis and going to lower time frame and going to the higher time frame. You have to check like 5 time frames, check different candlestick patterns. No, guys, it's as simple as this, guys. Okay. So you can see here, let me delete this guy. You can see here we had a sweep. Okay. We had a sweep. Now, I know this guy did not do multiple sell candles, but he did multiple buy candles. Now, the reason why I mark this out is because I can see there's a range here. All right, accumulation, manipulation, accumulation, manipulation, and distribution. So there's a range here, which also shows that there's an amount of transaction that was offloaded here. Right, so I like this. Is either it does this multiple range like this, take them out and then swing, or there's a series of sell candle, then series of buy candle for me to confirm that there's a sweep, it's a valid sweep. Okay, so now we can see that there's a sweep here, stop on, and this guy mitigated another block. Right, remember that mitigation is also one of the things that make my own pattern. Some people trade it differently, but this is how I've been able to trade and make a lot of money. And then a structural liquidity. All right, you can see series of sell candle, series of buy candle, right? And we had the structural liquidity also broke structure. Okay, it was there even broke structure. Structural liquidity. This is H1 time frame. Remember, structural liquidity broke structure, right? And so for us to see that this structural liquidity is valid and this whole setup is valid, we have to draw a Fibonacci from strong low to weak high. You can see, look at this, guys. You can see that our structural liquidity is at 71% fib. Okay? 71% fib. If it's not at 71% or below, that is not a plus setup. That is a B setup. I'm not saying it's going to fail. I'm not saying it does not play out. It does. All right? It does. But you may win maybe like 5 out of 10. But if you wait for this, you will win like 7 out of 10. Why are you giving your money away stupidly? Right? You don't need to be taking unnecessary losses. Yeah. So now that we know that structural liquidity has 71% fee, and you look at this, guys, look at this. What makes this also high probability is that you can see a lot of people buys will have been placed here. You'll be seeing this support becomes resistance, right? They'll say this is support becomes, I'm not saying it does not play out, it does not work. It does, but then some strategy has higher win rates than other strategies. Yeah. So this is support. They'll say this is support become resistance. And some people bought here, they made profits. And some people are waiting to come and buy here again. Or the people that didn't take off their profit, their stop loss is just below here. And look at what price did. Took all of them out. So this makes our own entry valid, that some people are stopped out before we enter. All right, because that's how the market trades. These people are buying, right? These people are buying, right? So they have to sell to them. Okay. It is all about transaction, liquidity. Yeah. If you're buying from somebody, it means somebody's selling to you, right? So these people already bought here, and some people want to buy again for more buys, seeing this as strong support. And these people that bought already, their stop losses here. So they have to take them out. They have to take those order out. When their stop loss is 8, is when you want to enter. And look at that. Okay. There's another setup, but I don't know. I don't want this video to be too long. We also took this one, EA, right? We also took this one, EA. We took this EA. We are still in this trade right now. It's the weekend. So when price open, you will know if we read TP or not. But there's not enough time. Let me show you proof that we actually called this. Okay, this is the before of the EA. Look at when we've called it. Right? This is the before of the EA setup. So you know we are not cherry picking. Look at it. We called it from here and see how long it took. It took days. We got it on the 2021. It came to our entry on the 24th. It took 3 days before it came to our entry. Okay, so if you want me to analyze this EA, just comment in the comment in the section if you want me to analyze this EA on our next video. Okay, just say something as simple as please analyze it, or I'm interested, or something like that in the comment section. Okay, and then I'll break this down on another video. Okay, so if you love this kind of content, please like, share, and comment. And join our VIP signal room is free. Okay, and if you want a detailed one-on-one mentorship program or masterclass, all right, just join the Telegram and chat with the admin, and then we'll show you how to do this. Okay, because I believe having somebody to hold you by your hand is different from you doing this by yourself. It saves you a lot of time, right? Energy, and then resources, money. Okay, unnecessary losses. So once again, thank you guys for watching. I'll see you in the next one.